Now, greater peace of mind comes from knowing your risk measurements. If you know your risk measurements, you won't get caught in this emotional trap or jump on a high-risk portfolio. Because you'll say, Scott, what's the risk in this portfolio that I might be considering? This is the problem that most investors, and then here's me and Scott trying to talk them off this rocket. Sometimes we can, sometimes we can't. Unseasoned investors extrapolate recent past performance into the future and forsake diversification. Because they see stuff like this. This was 2017. Every once in a while, the stock market has a really good year, and they think, wow, it did that last year, it's going to keep doing that. They make the same mistake when the market's going down. It goes down 10 or 15%. In their mind, it's going to keep doing that. Neither one is true. It's going to have some volatility. So they see that, and they jump on the aggressive bandwagon. So in the last class, I had this warning. Okay, this was January 27th, 2018, which was our last class, and we had just gone through new market highs. And I just said, you know, I want to caution you guys. I want to caution you guys. So here's the proof. You can be rationally optimistic, but the key word is rational. Rational optimism. Right now, we just saw this a couple weeks ago, Dow broke 26,000 on the Dow Jones Industrial Average. Seeing that all over the news. It's been a constant story for about a year and 3 months now, right? So we have to be careful though, just a word of caution, just like we don't panic in down markets, we don't get greedy in up markets. It can change in an instant. While it's my hope that things will go really good for a long, long time, there's no reason that it can't, because it can. I mean, it happened in the late 80s through the 90s. Certainly can for 10, 12, 15 years. But we can't count on it because there's things going on behind the scenes that we just don't know about, and then we can't count on it. So it can change in an instant. Things will change for reasons unknown to us at the present time, and performance will be different every year. The future will always be uncertain. Yeah, and I had no idea that next Monday would be the start of a decline. Had no idea. So this was the record highs, and then 13 days, down 10% in 13 days, right after that. But I had no idea when I just know that these things can happen at any time for any reason. Just happened to be, interest rates started ticking up a little bit more than they thought, so the market went down a little bit. But that's normal. Okay. This was 2010, there was a 17% decline. In 2011, I'll show you that lesson here shortly, there's 21%, a lot of 10s and 12s in there. 2017 was an anomaly. There was only a 3% decline during all of 2017. That's not normal. Not
most
normal.
of those years ended positive.
Yeah.
I think just 2 of them, right?
Yeah, 2011 was negative, but most of those ended up positive, yeah, exactly.